Welcome to the MUFG Global Markets podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, February 14th, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you. So late last week, the BOJ announced it would hold a fixed-rate JGB buying operation Monday, Tokyo time. We haven't seen one of these since, I think, 2018. So I guess the question is, why did they announce it? How did it go? Take us through it.
The BOJ announced a fixed-rate buying operation in reaction to a sell-off that took the 10 years JGB yield to the 0.23% on February 10th. On that evening, the BOJ announced it would carry out a fixed-rate JGB buying operation on February 14th. The announcement was made ahead of the USDJPY release and set for Monday, as it was a holiday in Japan on Friday. The BOJ did conduct the operations Monday morning, but there were no bids, as the 10 years yield had already declined, hitting 0.20% at one time before recovering and rising to the 0.22% mark. The start of a global post-COVID rise in rates has just begun. It is too soon to declare the upward stress on JGB rates as a thing of the past based only on today's no-bid result and BOJ's fixed-rate operations.
Yeah, I mean that's a good point. I think it's so funny. I had forgotten about this type of operation. For our listeners who are maybe more casual observers of the market, the BOJ has regular scheduled purchase operations. This is a separate event where they actually, and it happens rarely, but when the market kind of threatens to break their 0% band, which they've called plus or minus 25, they have this adoption of announcing these unlimited buying operations at a particular yield, and Monday was a great example of that. So I guess the question is how the deployment of this rarely used weapon changes trading dynamics going forward.
Over the near term, we'll be watching the following 3 points in regard to the BOJ's monetary operations. First, same-day JGB buying operations. Second, any advance notice of fixed-rate operations. And third, allocations for continuous fixed-rate operations. Pressure has been building for Japanese investors to sell JGBs. Then the BOJ will likely head off rising JGB rates risk with same-day operations. The BOJ may carry out fixed-rate operations with a prior notice, as it did today for foreign investors. Moreover, while prior notice of continuous fixed-rate operations out of the extended Japanese holidays could have the effects of cooling a rise in JGB rates when G10 central banks announce rate hikes. For example, at the May 3rd to 4th FOMC meeting that falls during Golden Week, the policy effects of unprecedented operations are unknown. In today's fixed-rate buying operation, the BOJ announced it would buy unlimited amount of series 364 to 366 JGBs, especially the newly issued 365 JGBs, at a yield of 0.25%. The target series numbers were designated, but the BOJ did not in fact supply unlimited money. Rather, the fixed-rate operations are a double-edged sword. Supplying unlimited amount of money will likely support an extreme weakening yen. Today's fixed-rate buying operations showed us that the BOJ intends to continue yield control operations without allowing yen to weaken too much, while limiting a rise in JGB rates during overseas trading hours over Japanese holidays. Over the near term, we expect yen rates to maintain a neutral bias.
I mean, it is just amazing how many different weapons the BOJ has and how precise they are. I mean, you think about QE as being a very dull instrument. You know, I think the BOJ has really figured out a way to make it extremely precise. I suspect that, you know, the ECBs of the world and the FOMCs of the world should pay attention. So switching topics, the BOJ released the balance of payment data for calendar year 2021 this past Tuesday. Although dated, I find these reports can really help investors, you know, understand where we were, which is a critical component of coming up with a view of where you're going. What would you highlight to our listeners?
According to the balance of payment data, Japanese investors unloaded a net 494 billion yen of overseas securities in 2021, while foreigners net bought 21 trillion yen of Japanese securities. Foreigners increased buying by 12 trillion yen of JGBs, 1.2 trillion yen of TDBs, and 3.9 trillion yen of other yen bonds, chiefly Japanese corporate bonds, while Japanese bought 5 trillion yen more of US sovereign bonds. Preference for JGBs among foreigners exceeded preference for US bonds among Japanese investors. In December, Japanese sold a lot of foreign bonds, particularly Japanese banks, by 1.5 trillion yen, pension funds by 434 billion yen, and lifers by 343 billion yen. They shifted their assets to foreign bonds to the foreign stocks and alternative investments. Japanese investors' net buying of foreign stocks and investment fund holdings was directed toward, in order to upscale, first, the US by 889 billion yen, and a second, Cayman Island by 238 billion yen, and Luxembourg by 83 billion yen. With the start of the US rate hike looming, Japanese investors expanded their exposure to US stocks in particular, as well as in alternative investment via Cayman Islands and Luxembourg investment funds at the end of 2021.
So that's interesting. So you have in full year 2021, you've got, international investors buying more yen-denominated securities than Japanese investors buying foreign securities, and then in a little bit of a similar dynamic, similar but different dynamic. You have things changing where the Japanese investors are selling out of there continues to be tepid demand for international debt, but you start to see a little bit of an acceleration in demand for risk assets. So that's kind of where we were in December. There's been some similar information out for January. We get a fuller picture. We'll get a fuller picture of that when the tick data is released this week, and certainly look forward to you writing that up to give us better sense of what Japanese investors were up to in December as well. So I think we're probably about out of time here, but I don't want to wrap up the podcast without sharing your outlook for various markets, yen rate, spot dollar yen, and yen basis. So please take us through it.
Okay. The yen recent weakening appears to be due to not only the turnaround in stock prices, but also growing speculation that the BOJ will limit a rise in JGB rates. Over the near term, the January FOMC minutes released on February 16th will likely help with pricing in a rate hike. As US rates rise, the BOJ may work to limit a tender rise by JGB rates under YCC operations. However, dollar-yen rise could pause if US stock prices soften after US rates rise. We change our view of the bias for dollar-yen from neutral to bullish, with trading in a higher 2-yen range of 114.50 to 116.50. The yen swap rate curve has risen and steepened, with the JGB 10-year yield tapping 0.23% last Friday. But concerns about and understanding of the BOJ's YCC operations appear to have deepened. We have likely see correlation between the yen and the dollar rates. JGB flows among foreign investors will have a limiting effect on a yen yield rise. Also, there is not much JGB auction stress on the long end of the JGB yield curve until the 20-year of the auction on February 17th. We maintain our view of the neutral bias for yen rates and wait and see what happens around the BOJ. The yen basis curve has widened, especially on a front end. Ministry of Finance weekly data for January 30th to February 5th shows that both Japanese 307 billion yen and foreigners 814 billion yen were net buyers. The net buying of overseas securities by Japanese investors was driven primarily by 264 billion yen in net buying of stocks and investment fund holdings, with trend for medium to long-term foreign bonds net buying by 72 billion yen and a short-term foreign bonds net selling by 30 billion yen slightly changed. Overseas investors net sold 234 billion yen of Japanese stocks and investment fund holdings, but net bought 764 billion yen of short-term bonds and 287 billion yen of medium to long-term yen bonds. Overseas investors have a strong preference for JGBs. Looking ahead, we expect foreigners to maintain their strong appetite for JGBs, but this could hit up against overseas direct investing moves just out of the fiscal year end by Japanese companies. While Japanese investors could build up their overseas asset positions, especially with alternative assets, we change our view of the bias for yen basis from neutral to widening.
Okay, so bullish on dollar yen, neutral on yen rate, and a wider bias for cross-currency basis.
Yes.
Thank you. As always, I would encourage our listeners to check out Sekido's written research pieces for more information. And as always, great stuff, Sekido-san. Thanks for coming on the podcast.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.